as the residential segment. But is that enough to stir a turnaround? CNBC TV 18's Kevin Lee finds out.
India's real estate sector has been ailing for the last 2 years, with not a lot of deals marking the landscape. But come 2015, and it seems like the big bang deals are back, both in residential and commercial. Starting off with residential first, the deal that stands out in 2015 is Cyrus Poonawala's purchase of the Lincoln House in Breach Candy in Mumbai for a whopping 750 crores. Remember, this makes it the largest self-use residential deal that the country has seen.
Formerly called the Wankaneer House, this palatial seaside heritage property spread over a sprawling 50,000 acres was used as the US consulate until 2011. But now, after marking the country's most expensive home buyout ever, Pune-based industrialist Cyrus Poonawala's family intends to use the Lincoln House for residential purposes.
I naturally, of course, because of the size of the deal, had some thoughts about it, but I think within a week or two, we pretty much made up our minds and decided to go ahead.
Just a week before Lincoln House was sold, industrialist Kumar Mangalam Birla bought the Jatia House in Mumbai's Malabar Hills for 425 crore rupees.
I do feel is that, the lower end of the segment on residential and really the top end, which is the marquee properties, are not impacted with economic downturn, are not impacted with the overall sentiment in the market. These are properties at the top end, very few that come out. But if they come out, there are lots of seekers for that property.
Now for the action in the commercial space. In the country's largest commercial real estate deal, Bengaluru-based developer RMZ bought 1.2 million square feet in Mumbai's Bandra Kurla complex for nearly 2,350 crore rupees. In another 1,400 crore rupee deal in the same area, Godrej Properties sold 0.4 million square feet to pharma giant Abbott. The sector also saw renewed interest from private equity players investing up to 18,500 crore rupees in the sector in 2016, up 84% from last year. The deal that stands out include global giant Warburg Pincus and Goldman Sachs investment in Piramal Realty for a combined value of 2,800 crore rupees, and Singapore-based GIC's 2,000 crore rupee investment in debt-ridden DLF through an SPV.
The government, on its part, did its best to help the ailing sector as well. Along with the Smart City project, the Pradhan Mantri Awas Yojana was revamped and launched as the Affordable Housing Mission, targeting 2 crore affordable urban housing units by 2022. This, coupled with urban local bodies' decision to ease construction, made it easier for builders and investors alike.
State governments were quick to adopt too. Maharashtra's Chief Minister, for instance, promised 11 lakh affordable homes in Mumbai, and the city's municipal corporation promptly issued a circular to cut down the number of permissions needed by developers to begin construction. While stalled legislatures like the Land Acquisition Bill pulled down the enthusiasm, a big plus towards the end of the year was the Real Estate Regulation and Development Bill, which was cleared by the Cabinet and is waiting parliamentary approval. The bill aims to empower customers and make developers accountable for project delays.
2016 is expected to see many more moves on the policy front, particularly with Maharashtra's housing policy coming out early in the year. The allowance of real estate investment trusts, or REITs, will define how much foreign direct investment the construction sector gets in the coming months. Add to that the fact that Prime Minister Modi has inked strategic pacts with the Singapore government for urban housing makes the year a very exciting one for real estate. In Mumbai, with Arif Sherwani, this is Kevin Lee.